Finally, this evening, the South African rand weakened to 18 rand 0.79 against the US dollar on Tuesday as markets reacted to President Trump's fluctuating tariff policies. Locally, the rand fell 0.4% following volatile trading on Monday, including a brief 2% drop. Now, Trump's actions, including tariffs on Chinese imports and a pause on Mexican and Canadian tariffs, continue to affect global markets. Reuters spoke to RBC's head of market analyst, Jeanette Moy, about the U.S. tariffs on Chinese imports. Here's what she had to say.
Well, first of all, I think it's clear that China will go for tit for tat when faced with U.S. Tariff threats. And secondly, you mentioned that these measures are actually quite mild. And the fact is that China exports way more to the US than otherwise. So there's not a lot of button that China can actually push. So the measures are likely to be, of limited nature anyway. China doesn't really import a lot of crude or natural gas from the US. Whereas I think the pain point would be on agriculture, because that is always a political aspect, and the U.S. farmers will suffer and the producers there. And I think the export control on rare earths, it could be potentially more powerful if that potentially can be intensified, because it's hard to actually substitute those products from China, for example. But you mentioned very interestingly, these don't start immediately, which actually allows some potential for negotiation, given that the two leaders are going to talk. But I would say we shouldn't have too high expectation on what's happened to Canada and Mexico, because ultimately Mexico and Canada are allies, traditional allies of the U.S., whereas for China and U.S., the relationship is always kind of rivalry if these tariffs go ahead. And remember, the U.S. has mentioned that if countries retaliate, they will actually further intensify the tariff. So we could be in a series of retaliation going forward. So that is not great, of course. But I also believe that the stance on fiscal stimulus on China has been it is willing to do more, and I think it has been holding up its dry powder. Because they want to observe what is going to happen with trade. And if we have more certainty that this is going to escalate for real, then I presume that in 2025 there would be more forceful measures to support domestic consumption.